Hi there, everyone, and welcome to the first episode of TurvilleTV. This is your weekly show coming to you every Thursday at 12 p.m. Australian Eastern Daylight Savings Time. In the first episode, we're going live right now on YouTube and over on Instagram. Instagram, we're going to be cutting off a little bit earlier as we're going to be showing you some interesting frameworks. And to continue watching that, jump over to our YouTube channel. The future for this show, where I see it going, is talking all things business, finance, and investing. I've always done this on more of an ad hoc type basis, dealing one-on-one with clients or just doing one-off webinars here and there. Not a consistent show and not something that can be interactive. So every Thursday, we're going to be talking business, we're going to be talking finance, and we're going to be talking investing. This first episode will be for the business owners out there, or those with a side hustle, or those looking to get into business. But it doesn't mean that all future episodes are going to be business related. We're going to be talking investing, we're going to be talking wealth creation, we'll be looking at property, we'll be talking finance in the world of finance, and we'll also definitely be touching on business. In future shows, what I would like to see is some live audience participation, perhaps having people call in. I want to see this show grow and evolve so you can get some value from it, and you can also participate and really grow it into a great show around business, finance, and investing, and something that is live and interactive every week. So today's show, I have decided that we will focus on what's called the growth equation for business. So many business owners out there, many of you are already in business. Some of you are looking to start a small business. Some of you are looking to start a side hustle during COVID. A lot of people set up little businesses, something online, consulting, selling a product, using social media to deliver something. You are perhaps building a business to sell or exit at some point in the coming years. Or you might be looking to improve a business, so buy a business to then improve. Today's show, regardless of which one of them you fit into, or if you're just interested in business but you're not in business and you may never actually get into it, today's show is going to be relevant for you. Looking at today, something called the growth equation. This is very simple, but I find in business, most things actually need to be simple. And keeping it simple is going to make it easier for you. So I talk to a lot of business owners. I talk to a lot of other suppliers to business owners, whether it's software or products. And the feedback that everyone gives me is that the majority of people out there want to grow their business in some way or another. But growing your business is a very broad term. Okay, it's usually what I say in the eye of the beholder. So that means growth to one person might be different from growth to the next person. What I see is that most people are not crystal clear on what growth means to them. They just know they haven't got what they want, but they also aren't super clear on where they're going to focus that growth. What is the thing that I'm going to do to grow the business? Because there's actually many things you can do. A lot of people just say, I need more leads, we need more traffic. That's only one way of 7 high-level ways. And we'll be looking at that, but we're also going to be looking at the other drivers of growth. So in today's show, I'm going to show you the growth equation. It explains it all. It explains all the drivers of revenue. It is very simple, but it's going to show you where a lot of the low-hanging fruit is. So if your business isn't at the size where you want it to be, or it's not growing at the rate you want it to grow at, okay, there's going to be some missing parts. And it's usually due to a lack of sales and marketing in both businesses, but having focus as well on specifically where. It starts with getting clear on what you want to achieve in your business. So you need to be clear on what is your vision and your purpose. How many stores or shops do you want to open up? How many products do you want to deliver to clients? What what revenue size do you want to get to? What's the size of your team? How big of a team do you want to grow? Do you want to be locally recognized or globally recognized? Do you want to be able to pay yourself a nice lifestyle sized wage, or are you just interested in creating mega profits for yourself? You need to get clear on these sort of things because it's going to give you a target and something to work towards. Okay, you can never hit the target you don't set. And when you say to yourself, I want to grow my business, or I want to get the business to a certain size so it can deliver these results, the question is then, how are you going to go about doing that? So there are many ways that you can grow a business, but what is important for you is getting clear on what would be the next best step and where is the low hanging fruit. So we're going to jump off Instagram live here. If you want to keep following, jump over to our YouTube channel. There's a link in the profile, or you can watch this afterwards. Okay, so let's jump over into the growth equation. Okay, so what we're looking at here, this is the growth equation that I've been talking about. I know there's a couple of boxes and a couple of numbers on the screen. I'm going to explain them to you now so you can understand how it works. Now, over here, we've got what looks like an ordinary profit and loss. Now, don't worry, this isn't going to be a boring accounting lesson, but this is what most people are going to understand. On a profit or loss, you've got your sales, you've then got your cost of sales, and then you've got your expenses or your overheads. So sales minus your cost of sales minus your expenses, that's going to give you your net profit. Okay, most people know what that looks like. That's as basic as it gets in accounting 101. What a lot of people don't know is all of this section up here. Okay, and so what this section up here is looking at is what are the drivers of sales. And you can see that there's 1, 2, 3, 4, 5, 6 up here. So the 7 ways to grow is to retain more of your current clients. Retain meaning they come on for the next year, so you're retaining them, they don't disappear. We're going to get some more leads. We'll come back to that. You're going to convert more of those leads. You're going to transact with your customers and clients more often. And the transaction value is the dollar amount that you're going to be transacting with. We've then got the cost of sales, how much it costs to make a sale, and then what are the expenses in the business. We're just going to be focusing on these ones at the top today, not cost of sales and expenses. And I'm going to be going into each in a little bit more detail, and we're going to put some numbers in here and have a bit of a play around so you can see where some of the low-hanging fruit is in this particular model. I'm also happy to share this particular framework. So if you wanted to access it and put in some of your numbers and have a bit of a play around, then you're welcome to do that. Just sing out, and there's a link below in the description where you can click on and send me a message, and I'll flick it through to you. So let's go through these, and then we're going to start putting some numbers in and having a bit of a play with it, and you'll see the power of it. Yes, it's simple, but it gives you the power of focus. And the missing thing in most businesses is clarity and reducing overwhelm. Most people aren't clear on what they want or how to do it, and most people are overwhelmed with a million different things and a million different ideas. If we can get clear on what we want and where we want to go, and we can reduce overwhelm down to this is what I need to focus on, funnily enough, things start to happen. So let's look in here. Existing is your existing clients. Okay, so that's what you've already got at the moment. You also see in each line there's old and new. Okay, you could also interpret that as last year versus next year. So at the moment it's the 17th of June 2021. We're coming up to 30 June, which is the end of financial year in Australia. But this is still going to work for you, and it doesn't matter where you are. If you're over in the US, 30 June is halfway through your financial year. That's completely fine. you can just bring the numbers in for where you're up to, and then you can do a little bit of a playing around and forecasting on, if I made some tweaks, what would these numbers look like in 12 months from now. So you're going to start with your existing clients. So if, as at right now, you have 100 clients, then your existing clients is 100 clients. Next, we have our retention rate, and that is, as a percentage, how many of our clients do we keep every year? Okay, not everyone has 100%. You might keep a lot of clients, so it might be in the very high 90s, 95, 98% of clients, or you might churn through a lot of clients. So an example there might be a brain surgeon. He's probably only ever seeing a client once, let's hope. Next, we've got the number of leads or inquiries. Okay, this is over 12 months. How many leads have you received? Okay, and what do you class as a lead? So it might be someone that inquires to know more about your business, or inquires to know how do you work and how could you help us and how could we work together. We've then got the conversion rate. So from those leads, how many of them are we converting into a customer? Because you already know not every lead that you speak to becomes a customer. A percentage of them do. Okay, so that would be the conversion percentage. That's going to give us total retained customers, total acquired customers, and total customers when we add both of them together. Then what we look at is, what are the transactions? How many times per year do I transact with my customers? So if you only sell one thing to your clients every year, you're only transacting with them once. Okay, if you transact with them every month, okay, you're going to transact with them 12 times, because there's 12 months in the year. And then the transaction value is what's the average invoice or receipt or docket that I send to a customer. So if you only sell one product once a year to a customer and the value is $500, your average transaction value would be $500. So when we times all these together, we add them up, and then we times it by the transactions and the transaction value, that will give you your annual sales. So when you look at your profit and loss and you see $500,000 in here, it's not one sale of 500,000, and it's not 500,000 sales for $1. It's a mix of things, but this will help us see all of those different drivers. And it's also going to allow us to see where potentially we need to make some tweaks. So let me now explain it by putting some numbers in here, and I'm just going to make these up. But let's pretend you had 765 clients as at right now, and what we want to do is we want to look at what things look like now, and then with some tweaks what they could look at over the next 12 months. And let's say we assume our retention rate it's pretty good. We're going to call it 90%. Okay, and now let's say the number of leads that we receive is 150 for the year, but we're only converting 50% of them. And let's say we transact, just to mix it up, 1.1 times per customer. So what that would mean is you transact with every customer once, but then 10% of your customers buy from you a second time, but only 10. That's what that 0.1 is. So every customer buys once. So let's say of your, what have we got? 764 total customers. So all 764 will buy from you once, and then 76 of that 764 will buy from you a second time. Let's pretend your transaction volume is $1,500. Okay, when we multiply this all out, that's going to give us our annual sales of 1.259 million for the year. Okay, I'm just going to put in some cost of sales now, just so we've got some numbers in here. But if we now go back and we look through what changes can we make to improve, because we want to grow our sales and we want to grow our net profit, and we're going to assume a 3 times valuation, which is very much a rule of thumb here. You know, I'm just making up a number. Yours might be a valuation of 1.3, it might be a valuation of 2, it might be a valuation of 6. Let's just work off 3 times profit at the moment. So we want to see what's our profit improve, and we want to see what's our potential valuation improve. So let's play around with some numbers, and this is what you can play with, okay? Because these numbers that we've got in here are your numbers at the moment. They're the real numbers. We're now going to look at what if we put some focus on improving some certain areas, what would those numbers look like? And if you're looking at this and you're thinking, but hang on, I don't know my average value, I don't know how to work this out, or conversion, or I don't track my leads, and I don't know my retention, I'll show you a little bit of a trick way that you can sort of reverse engineer this and work it out and get it pretty close. So existing clients is still going to be 765, and let's pretend we're going to put a little bit more focus this year on marketing. Okay, so what we're going to do is we want to retain more clients, and we're going to do that by looking after them. We're going to send them better communications. We're going to have better onboarding. We're going to have better experience for them. And we think we can improve our retention rate to 95%. And by focusing on leads, at the moment we can see it's 150, which is, you know, about 12 leads per month. Let's say we can improve that from 12 up to 20. So that's going to be 240 leads for the year. And with some improved focus on our marketing, we reckon we could get our conversion rate, let's just call it up to 60%. So again, that's not a massive conversion rate improvement. Even if we leave our transaction per year at 1.1 and our value at 1,500, we look at the numbers. Your net profit has gone from 177 up to 230. Your valuation's gone from 533 to 693. You've had a $53,000 profit improvement, and the value of the business has gone up $160,000. People aren't buying from you more often, and people aren't transacting, aren't paying you more. All we've done here is retained a few more clients, attracted a few more leads, and converted a few more of them. But look what happens if you go, well, I'd like to get some better numbers than that, because your sales there have gone up quite a fair bit. But what if that's not good enough for you? Okay. And now in this example, the 70% cost of sales is very high, but that's not what we're focusing on. We're just going to focus on top line at the moment. What you need to remember in the numbers is that moving the small numbers gives you a big increase. So I'll tell you what I mean. Transaction value if you improve your transaction from 1 to 2, that's 100% improvement, okay? Because when you double the number 1, it creates the number 2. If I was to double the price and the fee that we charge our clients, I'd have to change that to $3,000. That might be too much. So if I was to say to double your business, you need to double the price, you might say, yeah, but then no one would buy from me. Okay, well, instead of doubling the price, what if we just got them to buy more often? So we're not asking them to pay more, we're asking them to buy from you more often. So if we come in here and we change that to it's the bottom one, we change that to 1.5, and we put the price up, let's say we put the price up 5%, that's it. So instead of 1,500, it's 1,575. Your customers aren't going to know that it's gone up 5%. Now look at the improvement. Your sales have gone from 1.2 to 2 million. Your profit has gone from 177 to 417. And at a 3 times multiple, then a very, very, very rough valuation has now gone to 1.25. Just based on getting a few more leads, transacting with them more often, and putting your price up a little bit. Okay, so you can see here what has changed this the most is just changing the transactions per year. So I'll show you how much it's changed by, because let's change everything back to what it was in the prior year. Okay, so you can see how all of those match up. That matches up. All we've done now in this example is change it from 1.1 to 1.5, which means everyone buys from you once and 10% buy from you a second time. Now what we're saying is everyone buys from you once and half of your clients buy from you a second time. So we're not asking everyone to buy from you twice. That would be awesome. But let's just assume only half of them buy a second time at $1,500. Your sales have gone up about $450,000. Your profit has gone from 177 up to 315. So your profit's actually gone up 137. Compare that to the previous example where we had to improve retention, we had to get more leads, we had to convert more of those leads. Even when we changed those three there, your profit only went up 59,000. In this example, all we've done is got our customers to buy from us again, half of them to buy again during the year. That's it. And that's the change to the bottom line of your business. Okay, so what that is saying in this particular model is maybe the easiest thing for us to do is to focus on the frequency of our clients buying from us, because in doing that, in getting them to buy more frequent from us, we don't have to go out and win more clients, and we don't have to try and put our price up. The reason this is so important is because most people focus over here, okay, on their leads, and they're focusing on getting more leads. I just need to get more leads. But you don't always need to get more leads. Maybe you do, okay? And even, you know what? Even if we manage to double those leads, okay, it's not making, so look at that, it's not making an enormous improvement. It's changed it from 137 to 188. Now, you might be trying to get more leads and you're finding it very difficult. Perhaps you're not putting enough money into marketing. Perhaps you're doing the wrong type of marketing. Perhaps you're not doing enough marketing. Perhaps you're doing the marketing, but you're trying to run the rest of the business. Perhaps you don't have a marketing team. Perhaps your marketing team aren't very good. Perhaps the agency that you're using is not very good. Perhaps you're not crystal clear on the exact type of client or the ideal client that you need. And what the power with looking at it this way is that if it was me, I would be looking at this and I would be saying, how can we improve that transaction frequency? Because if we could change it from 1.1 to 1.9, we get a massive increase in sales. If I also then said, what if we put the price up by 10%? All I've done is remarketed to my existing clients. Remember, your existing clients know, like, and trust you. They're already transacting with you. They're already going to read your emails and read your direct mail and answer your phone calls and attend your webinars and attend your live streams and do all of these things. Winning new clients is the hardest sale to get. Now, if you want to grow, you're going to need to get new clients, okay? But you don't want to grow a big behemoth where they're only transacting with you very little and they're only paying you very little. That makes it very difficult, okay? You want to be focusing on what are the strategic levers that I can pull in this business to make the results that I want to get. Cost of sales here is a very high number. So if we reduce that to 50%, you see how some of the numbers here are going to get really, really high. Get really, really interesting. This is a great model to look at to then dictate where is my business improvement focus going to go. You might need some focus on getting more leads, but what if we could focus on converting more of those leads? How do we currently convert them? Does our website need to be improved? Does the way they engage and interact with us? Do we need to build out maybe some new brochures? Is the way we're handling their inbound phone calls and booking in and providing them with information and inviting them to events? Maybe if we can improve that or do more of it, it's going to create a better experience for our leads. And by targeting more specifically, we're targeting more people likely to be a customer. And let's say by doing that, we're going to improve our conversion rate to 60%. Okay, you can model these things out and it's going to show where your focus should go. So instead of just leads, perhaps your focus is, yes, we need leads, but we need to get people to buy from us more often. Okay, this one here, buying from us more often, gets forgotten about a lot. Okay, a lot of businesses that I speak to and I consult with, they're not aware that they should be putting some more focus on this. So when you then think about how do they transact more with us, okay, we're now going into marketing and sales, but also your services or your product that you have. If you've only got one product or service, they either need to buy that product or service a second time, or you need to introduce a new product or service. So instead of buying product one twice, perhaps they buy product one and then they buy product two, or they buy service one or then they buy service two. Okay, start thinking about that. What you can also start to think about is, well, what if I don't want to provide another product or another service? Okay, that's not what I want to do. Or I don't have the time, or I don't have the investment. Or what if someone else has got a product or service that you could sell on behalf of them? Okay, so you don't even have to create a new product or service. Someone else has already got it and you're going to bring it in and it's going to give you another transaction with your existing clients. Okay, so don't always think I have to come up with this. Someone else might already have it, that you can do a partnership or a JV. You could do an affiliate where you sell it and you take a clip of the sale. You could do a partnership where you market it together. There's a range of different ways you can go about doing that. It just starts with a conversation of what would be a product that's going to help this client solve a problem. Another way to think of that is, what do people buy before they buy from me? What do people buy while they're buying from me? What do people buy after they buy from me? And what do people buy instead of buying from me? Okay, that's a great framework that I learned from Jay Abraham. But that's going to give you some insights in if this is where my focus needs to go, and this is going to give me the big lever to increase sales and profit, then what are some things I can start to do to get my existing clients to buy from me a second time for the year, a third time for the year, a fourth time for the year, a fifth time for the year? Okay, it's going to be your easiest sale because you've already got a relationship and those clients have already got a certain level of trust with you. Okay, the hardest sale is getting new leads and winning new clients. So if this here is going to give you the biggest jump up and it's going to be the easiest jump up, perhaps that's where your focus needs to go. Now, I'm going to show you a quick way that you can come up with these numbers if you don't have them handy. Okay, you might be tracking leads, you might know what conversion is. There's a way that you can work it out. Okay, so I'm just going to clear everything I'm just going to quickly go through and clear everything just so you don't get distracted. And let's start to work backwards. Now, I'm going to have to take you back to year 10 algebra. So algebra that you learnt in high school, and I'll try and keep this as simple as possible. If it's a bit overwhelming for you, okay, you could show this video to your accountant or your bookkeeper and they'll be able to work this out for you. Many businesses nowadays, especially in the SME or SMB space, which is small to medium-sized businesses, which is businesses from $100,000 turnover up to 50 million. Okay, very wide. A lot of them are using products like Xero, MYOB, Sage, QuickBooks. You can pull reports from your accounting software that's going to give you some of these numbers to get us started. Okay, I'll show you how you do that. This one here, transaction value, if you look at all the invoices that you sent for the last 12 months, okay, if you look at the total number of invoices, so let's say you sent 1,000 invoices, and let's pretend your revenue was, so 1,000 invoices, and that was the total dollar amount of invoices sent. Then our average invoice amount is going to be 1,259. So for you, you know that in here, let's round it off. You know your transaction value is 1260. Okay, if we look at these 1,000 invoices and then we look at who we sent them to, in Microsoft Excel, which is what I'm in here, we can do a thing called remove duplicates, which is going to remove when you send the same invoice to the same person a second time. Let's pretend when we do that, it now only shows 900. Okay, so if we then go 1,000 divided by 900, we get 1.11, which means if I've only got 900 clients, but I sent 1,000 invoices, it would mean I've had to send the same invoice to someone at least a second time. Okay, so what we've now worked out is just from Xero or QBO or accounting software, what's our transaction value and what are the transactions per year. To now work out some of these numbers, here's how we can start to work backwards. Okay. If you don't know your leads, how many leads did you get last month? And if you go, oh, well, I probably got 14 leads last month. And I say to you, well, is that pretty normal? And you go, yeah, we usually get about 14 leads per month. Great. Well, 14 leads times 12, that would mean over 12 months, you would have received 168 leads. Let's just work with that number. And of those leads that came in, of 12 leads that came in, how many of them bought from you? Oh, well, 6 of them bought from me. Okay, so half the people you talk to buy from you. Yeah, that's what happened. Okay, and is that pretty normal? Okay, is that a normal month for you? 12 leads, 6 of them buy, 50% of them end up being buys. And you go, yeah, that's pretty accurate. Cool. Well, your conversion rate then is 50%. And if we now go backwards and I go, well, what's your retention rate? How many clients stay with you every year? You might not know, but potentially what that number is. So we might come into here and go, well, how many existing clients have you got? Okay, and you might go, oh, well, I've got, I don't know, 800 and maybe I've got 816 clients. Now, if we work that out, that's going to give you, we run those numbers, total customers 900, that matches up to that 900 times 1.1 times 1.2, gives me 1.259, 1.259. Geez, that's very close. Okay, that I got from Xero, and that I got from Xero, and from that I've managed to reverse engineer pretty much what my sales are and my profit and loss. Now, for you, let's say you go, well, you know what, I probably lose 10% of my customers every year. Okay, then we're going to put a retention rate in there of 90%, which means your existing clients is probably going to have to be a little bit higher. Let's jump it up. 910, 905. Cool. We're pretty close to the exact number that's in there. And you can now see, okay, these are actually my numbers right now. So that might go a little bit over your head, okay? But if you get a bit of help from your accountant, or if you're a client of mine and we haven't done something on this level before, then reach out to me and we'll go through it. Or I know I've got a lot of accountants that I work with and consult with. If you're looking at this, you're going to understand how I pulled these numbers together. You should be doing this for your clients, okay? This is some great growth planning for them. It can be a little bit above their heads because we're doing a bit of algebra. It's easy for me because I'm an accountant, but if it isn't the sort of thing that's easy for you, go to the numbers person that helps and supports you in your small business. So this is the growth equation. This is going to show how do we improve our net profit and the overall value of our business. This is a great tool that you can play with. Work with your marketers on it. Okay, work with your accountants, work with your bookkeeper. If you've got a board or an advisory board, when you're talking about growing, you can work through this and then come up with decisions around where you're going to focus and where you're going to make investments in your business. One last thing I'm going to point out on here is that this area here, okay, retention, leads, and conversion is marketing focused. Okay, so if you look in here and you see you're only maybe getting 100 leads for the year, and from those leads, you're only converting 20% of them. Okay, so you're not getting a lot of leads, but let's say in your industry, that's very low, and you're converting only 20% of them, which again, in your industry, let's pretend it's pretty low. You've got a marketing and sales problem in here. Okay, there could be a number of issues that are going on, but if you want to improve these numbers here, okay, it is marketing focused. You need to look at new and different ways of marketing. You need to get clear on your ideal client. You need to work with your marketers, or if you don't know how to improve these numbers and you don't work with an agency, you don't work with a marketing consultant, you don't have a marketing team member, maybe that's the next best move for you. You start having conversations with people and you can show them this model and say, hey, I want to improve these numbers because look, if we can get this from 100 to 240 and we can get it from 20 up to 40, okay, this is the improvement that's going to give us. The great thing for you as the business owner, okay, is that you're going to see the revenue improvement. You can actually factor in, okay, well, our current costs are 240, but perhaps even to bring on this marketing person, maybe it's going to cost me, I don't know, $3,000 a month. So I'm just going to add 36 grand here onto my expenses. So I'm actually factoring in this increased spend on marketing, and I can still then see what the numbers look like. Okay, so number of great ways to play around with it. Not as many people lean on and use a framework like this. Okay, and they tend to then get overwhelmed and they don't know where to focus, and by default they just focus on getting new leads because you don't know any other way to think about it. You don't know any other areas to focus. This is going to open you up to a lot of different ways and a lot of different areas to be focusing in your business. So that has been an in-depth look at the growth equation. In future episodes, we're going to be looking at finance. We're going to be looking at wealth creation. We're going to be, I'm going to look to introduce a new show called Influential Leaders, which is going to be interview style, where I can get some great people from the business, finance, and investing world, where we can drill in and ask them and find out about their secret sources, how they've achieved success, the advice that they're giving to, a lot of their high ticket consulting and coaching clients. So you can get some learnings from it. I'm also going to get some learnings from it. So there's something in it for me as well. That's where I want to take this show. So future episodes, we're going to do some deep dives. We're going to be looking at some insights and frameworks like this. I'm going to be also interested and dictated by what the viewers of TurvilleTV have to say about this. I've got plenty of great ideas and distinctions and learnings and teachings that I want to bring for you, but that is the end of the first show and the first episode for TurvilleTV. I hope you took a few insights from the growth equation, and more so where you can focus, and that there are actually different areas that you can focus on in your business. Okay, so you can take it to that place where you want to get it to. You can get the results that you want, but you also don't have to waste time focusing on the wrong areas or doing the same thing for the next 12 months and ending up in the same position. You've now got some new insights on where you can focus. I'm Brad Turville. This is TurvilleTV. I'll see you next Thursday.